Hi, thanks for tuning in. This is the US Futures Weekly Chart Analysis for the week ending 16th of February 2024. First chart is the US dollar index futures as usual. And I've been away for a couple of weeks, so we've got a little bit of work to do to catch up on what's been missing. And the interesting level, before I left, was this level here. It's an old axis line in the background. And you can see that it's caught the market a number of times previously, and the market is still trying to get through this level. It's pulled back this week, had a run up, tried to crash through. This was on a news announcement, but it's still closed back at that level. If we have a quick look at the daily chart, look inside that bar, because that bar there is a real good example of a news event. Here's the daily chart. And 1, 2, 3, 4, 5. So that was the Monday. You can see that on the news, prices pulled back, accelerated higher, and then it's come back to consolidate. And looking at the volumes, the first consolidation bar was on low volume. A little bit of supply has been drawn out as price moved above that important level. And then on Friday, the market really has just tried to absorb supply. So that looks probably more positive than negative, more positive for higher prices than negative. But there's no doubt the market is having some issues getting through that important level. Perhaps we should just look at some of the other markets now and see if they're giving us any telltale signs on what this market may do. Because at the moment, there is definitely supply being drawn out from above. There is some demand being shown in the market through here, which suggests that the market will go higher, but it's really struggling to get through this 104 level. E-mini S&P 500 index futures, and you can see the market's been quite strong. Now this week, when the strength came in on the US dollar, this market has moved into consolidation mode. It's traded back within the range of the previous bar, and it's recovered most of any of the lost ground on an increase in volume to close almost level with the previous close. This is a market that's attempting to absorb the strength in the US dollar. And you can see that pretty clearly there as prices come back through the body of the previous bar and then recovered to close back up above the midpoint of this week's traded range on an increase in volume and slightly above average volume. This is a market that's attempting to absorb the strength in the US dollar and either go sideways to up in response. It's a good example of a market attempting to absorb the strength in the US dollar. 10-year note futures. And here's a good example of a market that's been knocked down due to the strength in the US dollar. And there you can see the market attempted to hold on last week at this level here, and it's collapsed this week and accelerated lower with an increased spread and slightly increased volume up to about average. So that was genuine trading, and it's found support there where the market consolidated here in the background. It may be able to find some support there around the 110 level here. So there may be an attempt to support just in here, especially if the US dollar actually goes through a period of consolidation now after it's pushed up this week. We'll see. But there's some chance this market will make a go at consolidating here around the 110 level. Copper price futures. Copper price futures have been trading pretty much sideways in a range for an extended period now. Here's the levels as I see them right now. You can see the market's been trading in this range between these two levels for an extended period. Now, 2 weeks ago on this very high volume, there must have been buying support come in there. You wouldn't have known at the time, but for price to reverse this week and push higher on above average volume, there must have been good buying support coming in here. This is like a shakeout over 2 bars here. So I would keep that in mind. The most likely response to 2 high volume bars like this, in fact, the last 4 bars have been all quite high volume, is a test for supply. A test for supply, looking for low volume. If price can dip lower like this with a narrow spread and then pop back up in the first day or so of trade next week and show that volumes are reduced, then the path will be open for a push higher back up to the highs of the range. If supply continues to be drawn out, you'll probably see price trading sideways to down and maybe retest the lows of the range. So just see how much volume continues to be drawn out. There's no doubt the last 5 out of 6 bars have all had well above average volume, and it looks like there's more demand than supply being drawn out. Although that said, this bar here, it looks like supply, so maybe there's an equilibrium in the market there. Gold price futures. Gold price futures looked really promising back here in this 3-bar reversal with a confirmation the next bar. Then price spent a little bit of time testing the water for supply before accelerating higher and looking like it really might have a crack. And then this awkward looking bar turned up, which was never really explained clearly. But I do note that more recently, this little narrow spread down bar on above average volume suggests that buying support is still really strong in this market. And there was an up bar in response, albeit a bar that's drawn out some supply. This is like an absorption bar. And then prices pulled back on low volume and then shaken out. It's a little mini shakeout. It's not a really big one, just a little mini shakeout of the range. Look for an early test for supply in this market to confirm that selling pressure is low. And if it is, and the US dollar could go sideways, this market will attempt to pop higher. If the US dollar continues to strengthen, this market will be forced to absorb the strength in the US dollar, and that'll force it to go sideways, perhaps slightly lower. But you can see there's a decent effort in this market here, here, here to absorb supply, and this week as well, to absorb supply, absorb the strength in the US dollar. This market doesn't want to go down. The opportunity's certainly been there to go down. It's not going down, at least not at this point in time anyway. Silver price futures reversed strongly this week. It's a really messy chart at the moment. It's a really messy chart. It's not really that clear, not like the gold chart. There's the old lows of the range, and there was sort of a level there that's been developing for a little while now. But prices dipped below the lows and then accelerated higher this week on really high volume. I don't know if there was a news event that caused that. If not, all I can say is the retail trading in this market must be really strong. Retail trading generally causes a messy chart like this, and this chart is looking really messy. You compare this to the copper chart and the gold chart, two kind of associated markets, and they're so much clearer to read. The levels are so much more defined and respected. Levels aren't respected on this chart, or not properly anyway. So anyway, prices accelerated higher this week with an increased spread towards the upside and an increased volume well above average. In fact, the highest volume for over a year, for a long time. So On that count, spread's probably not as wide as it should have been if that was all buying. So some supply's been drawn out. Not exactly sure what to make of it. What I can say is the response will be more important than this week's bar. And on whenever high volume like this has been drawn out, and whenever price makes strong gains in a relatively short period of time, then the market will almost always attempt to test for supply. Whether it's a successful test or not, we'll have to wait and see. But there'll be an attempt to test for supply and consolidate and confirm these gains, and we'll see what the response to that is. So expect at least early next week the market to dip a little lower with a narrow spread and just see if volume continues to be drawn out or whether supply is actually quite low, which would then allow the market to move higher in response. Like crude price futures, another fairly messy chart, although I'm not sure that this one is so much due to retail involvement. Price pushed up here and looked like it was going to break out, pulled completely back inside the range again in response, accelerated higher again the following week, like a yo-yo, and this week prices continued higher, albeit with a reduced spread on increased and above average volume, which suggests there is supply being drawn out of the market. This is a messy chart as well. You have got some sort of pressing nature to the upside here. It's not entirely convincing, but it is there by the looks. I won't be surprised to see this market dip lower again in this sort of fashion, like these two bars. Something more like this. Perhaps only down to this breakout line. We'll see. But I'm not convinced that's a good breakout. We'll see. I'm not convinced. I'd rather watch this week and get some form of confirmation. I think if price attempts to go higher, it's going to get smacked down by supply from the left. And I think there's more chance the market is consolidating with a pressing nature towards the upside, like this, than it is actually attempting to break out and accelerate higher. Remains to be seen. This is the Euro US dollar currency futures, and this is a market that looks to be attempting to hold on. It doesn't want to go down. It's trying to hold on without breaking down. The strength in the US dollar is causing it issues, and it's attempting to absorb the strength in the US dollar. Volumes both weeks were particularly high, slightly below average. So selling pressure isn't overwhelming, and that's probably why this market is able to make a decent attempt to hold on. So you'd have to say it'll all depend on the US dollar here. The US dollar goes sideways to down, this market will go up. And if the US dollar goes sideways to up, this market is probably going to be threatened and forced to, it may be able to consolidate there, otherwise there. The lows of the range come through here. So there's plenty of potential levels of support below, but it's attempting to hold on. It's attempting to absorb the strength in the US dollar. British pound currency futures are generally doing a similar thing to the euro. You can see the market was actually a little bit stronger up here. It was bumping its head up and trying to hold on, and it just broke down there. It continues to hold on. It hasn't got down to the next lower level yet. It's reluctant to move lower. Similar to the euro, it's attempting to absorb the strength in the US dollar, which I guess most of the currency futures will be doing at the moment. And similar to the euro, the volume over the last 2 weeks has been below average, certainly not strong, and that's giving the market a chance to hold on and not break down. Aussie dollar currency futures are also playing a similar game. They're attempting to hold on. They're reluctant to move lower. You've got previous support to the left here. This market will find some support being drawn out from the left if it does push lower, but it really is attempting to hold on here and doing a pretty good job at it so far, albeit volumes are low in this market as well, below average both weeks. So that's giving it a chance to hold on and not move lower. It will really depend on how strong the US dollar is. If the US dollar breaks above 104 on that dollar index chart, I expect this market will finally give in and move lower, as will the euro and the British pound. They're all holding on reduced volumes. And if the US dollar really accelerates high now and breaks that 104 level, these markets will be under pretty strong pressure. Bitcoin futures have finally punched above this level here where we anticipated that there would be increased resistance. You can see the effort the market's put in to deal with that increased resistance. It's taken a while for it to do its work, but it did get it done in the end. And you can see there was a period of absorption here, a gap up, an acceleration higher to the highs of the range, a period of consolidation. Supply was drawn out. Price came back in response to the supply. Buying support was drawn out here. There was an absorption bar in response. So that was a suggestion that the buyers had gained the upper hand on the supply that was drawn out here. And then the market accelerated higher and above the highs of the range. And then it's accelerated higher for a second week on an increase in volume and about average volume. So this was genuine trading, and price has broken out to a new level. So that's pretty good and that's pretty strong. Once this momentum begins to ease, you'll see the market move into consolidation mode for a little period, and you'll see it testing for supply like this. So a little narrow spread down bar on low volume is exactly what you want to see now. And if that happens for a few days, some narrow spread down bars where the market consolidates and absorbs supply. Whenever markets make strong gains in a relatively short period of time, supply will be drawn out. There'll be some profit taking, some people getting out from stale positions to the left, and there'll be some shorting from some people. And that supply needs to be absorbed, and that's what the period of consolidation is all about. So a relatively narrow spread suggests that the market remains strong. If price has to dip really low to consolidate, the market will be less strong than if the market is able to just dip down shallow and briefly before pushing higher again. It's a good sign the underlying strength in the market is really strong. It's really positive. So expect when this momentum begins to ease that this market will go through some sort of period of consolidation and absorption. And when it does, the depth and duration of the period of consolidation will be a good way to judge the underlying strength of the market. Okay, just back to US dollar index futures quickly. And the important level comes through here around the 104. Now, I think this market looks stronger than weaker, and this little effort here over the last 2 weeks will have absorbed some of the supply being drawn out from above. And that will give this market some chance at moving higher. If that opportunity is accepted and the market moves higher, all these other markets will be back under pressure. And the ones that are able to absorb the strength in the US dollar, if it chooses to go higher here, it will be an example to show you which markets really do have underlying strength. So watch carefully. If this market breaks down though, and I don't actually think it will, but if it does, these markets that have shown a propensity to absorb the strength in the US dollar, they'll accelerate higher. So, going to be interesting next week for sure. Thanks for your time. That's it for now. Good to be back. See you all again next week. See ya.